Before we begin today, please do take a look at the disclaimer on your screen, which is also available on our website. Essentially, this is just a reminder that any comments that we make today regarding companies, funds, or commodities are not meant as investment advice. So everyone's circumstances are different. It's important to do your own research or do seek professional guidance. And with that, welcome again to Amati Insights this week. The point of the call is to share some of our current thoughts on the tariff turbulence that we're seeing in the markets. And today I'm joined by Paul Jourdan, CEO of Amati and Portfolio Manager for the UK Equity Funds, and George Lequime, PM for the Amati Strategic Metals Fund. So welcome to you both. And I think maybe to start with you, Paul, any sort of initial thoughts from the UK perspective?
Yeah, well, just a few big picture thoughts. And just first of all, to sort of stand back from that extraordinary speech we heard last week on so-called Liberation Day, where I think what we were witnessing was, well, it was set up to be a historic speech. So Trump's preamble to it was, future historians are going to write about this as the turning point for America. And what we then got was something quite difficult to describe, unexpected in many quarters, economically nonsensical, but more importantly, politically just facile, and it will be looked backwards, or it will be looked back on as a speech which one might describe as a sort of anti-Gettysburg moment for the US, when instead of a historic speech being made, what we had was a speech where really not one single statement in the speech could be upheld as true or noteworthy or dignified even, or noble in any way. And instead of thoughts that we had, back in Gettysburg days of the proposition that all men are created equal, really what that's now been supplanted by a moment that an Animal Farm type moment where one might say, well, some are more equal than others, and it turns out America first kind of means rest of the world last. And that became very clear. And politically, that's incredibly damaging to the US's reputation, to its soft power, to its ability to bring off alliances. Clearly, this is a regime that's making the statement. It's not on behalf really of the whole of the American people, and it's important to remember that. But nonetheless, this will do a great deal of damage, and it's clearly unnerved the markets. So then, maybe it's just worth also just examining a little bit, what is the basis of what's going on here? Does this really make any kind of sense? Trump's equation of what they called tariffs, including currency manipulation and trade barriers. And it turns out that actually what was going on here was just a simple equation of the trade balance divided by American exports to a particular country equals a tariff. Of course, that's just simply nonsense. It's just a false claim. And we're in this world of being asked to believe impossible things before breakfast. And really, since then, we're just, people are scratching their heads saying, what do we make of this? And then, just to touch on the sort of final part of the narrative, it turned out that the bond market started to get worried. And of course, the bond markets here are completely decisive. And, I think when it's analysed, why did Trump capitulate? Why did he back down over all of these announced tariffs? I think it will emerge. The bond market started to get too scary, or in Trump's words, yippee, whatever that means. It's worth just noting at this point that the US has to finance a record amount of its debt in 2025. I think, George, you were saying a few days ago, something like is it 7 trillion or 9 trillion? Or
7 trillion left to refinance.
7 trillion left to do. And that's a scary amount of money. And of course, it requires foreigners to do the buying. That's not all going to be bought by Americans. And in fact, a lot of that buying is financed by the trade surpluses that America has with other countries. And so here we have this incredibly complex, interconnected world. And Trump comes along with this sledgehammer type simplistic idea, tariffs are going to make us all rich. Let's put lots of tariffs on everything. And of course, it turns out that actually it's a fallacy, and B, an economic disaster to try and do that. You start unpicking this unbelievable tangle of complexity, and it just doesn't work. So, I think that's kind of what happened. So things were then reversed and walked back, and the markets rallied, but not to the previous level, importantly. And now we're left with this sort of cliffhanger moment is, what then happens? How does this unfold in the future? And maybe that's a good point, Graeme, to bring your thoughts in. How do you see this going forward?
Yeah, well, it's really interesting because it's a sort of sharp move of uncertainty in the market, but really that's an extension of uncertainty that we've seen in the companies we talk to since about the middle of last year or even earlier. So, companies were waiting initially to make investments because of interest rates, and then because of the election, and now there's just if you're any kind of sitting in a board of any industrial company looking to make some investments into new manufacturing automation, you don't know where to do those things now because you have to wait to work out what how this whole thing plays out, and that is what's disturbing the market, I think, at the moment, certainly from the global side. And obviously we don't have any insights that are greater than anyone else in terms of what's in President Trump's head or what his plans are. And historically, it's been right in times like this, we think, to sort of stick to your knitting and say what are the things that you're investing in that you believe in the longer run, and which of those are ultimately not going to be disturbed by these kind of delays, these relatively short-term imbalances that we're seeing in the world. Because investment does have to happen. A lot of innovation happens because it drives better productivity, it lowers cost, it improves lives for workers, or it's just driven by regulation or consumer kind of preferences, and those things are lasting typically. So for decades plus. And so even though we're having this period where there's a lot of uncertainty, we're trying to just focus on the companies where that we think is being overly discounted now over any reasonable length of time. We have an automation company, for example, that now trades, the valuation assumes zero growth forever, at a reasonable discount rate. And so we can take advantage of those things, we think, and live through the volatility in the short term. But it's amazing how, the whole kind of attitude to risk has gone from let's buy growth to let's go and hide somewhere. And certainly from what we hear, there's a lot of hiding going on in gold, George. Is that right?
Yeah, I mean, it's your ultimate safe haven trade, and that's what we're seeing right now. The market, as you say, it's sort of shifting to this risk-off scenario now, and gold has been shunned for a while. It's obviously during that period where rates were rising, you didn't really want to have gold. Central banks have been buying in the background, but that structural picture is still very much there. If anything, it's probably intensified because of the mistrust between nations. If you look at the percentage held in gold by central banks around the world, especially in Asia, they continue to buy, and you can understand why. And now you've got a situation where the market in generalist portfolio managers are going risk off, so they're moving a little bit into gold. Gold tends to do well in times of economic uncertainty. It does well in times of recession. It does well when rates are coming down as well. So it's really a good environment for gold to take player to perform well in. And I think what's happening in the past week, as we've had this tit for tat tariff war between China and the US, it seems in the market that China have been aggressively selling down US treasuries. We know that they have been selling for a while, and maybe they accelerated that sell program, moving into euros, moving into gold. So that's kind of lifting the gold price at the moment.
But where is China up to in terms of its gold purchases in the central bank?
They tend to lag a little bit in the disclosure, and there's always it's taken with a pinch of salt what's the actual number, but the last ones that the World Gold Council published was around about 6% of the reserves in gold, foreign exchange reserves, and compare that to Europe, which is typically 30 to 40, 50%, apart from the UK. And they've been vocal about increasing their exposure to gold. And also at the consumer level, there's a greater propensity to own gold, and households as well look at gold as a protection against the devaluation of the yuan, and as an investment in an environment where other asset classes have struggled to perform, especially with the property sector in China. So that we're still seeing record amount of demand from the retail side in China, as well as central bank buying.
Is it too early to talk about de-dollarization? Is that a premature kind of argument that, clearly China would like a world which isn't dominated by the dollar, because that poses a threat of sanctions? And I did note that Marco Rubio was massively criticizing Brazil the other day for doing a deal with China where they were going to trade directly in their own currencies. Outrageous, not going through the dollar. Do you think it's premature?
I think it's premature, but there's certainly a feeling of a weaponization of the dollar that's been taking place in the last few years, and that sits uncomfortable with these emerging nations like India, like China, like Brazil. Again, they were part of the BRICS, and there was this talk about an alternative currency. I think it's too premature to talk about an alternative currency, but certainly opportunistically, where you can trade outside of the dollar, that will probably continue. Moving
no doubt,
forward.
it's driving countries to consider alternatives, isn't it? That they maybe wouldn't have considered. I mean, even in Europe, on a slightly different tone, but we hear some European. We obviously have seen Spain looking for closer ties with China politically, and we've even had examples of, for example, the Portuguese Prime Minister now sort of calling the US an unreliable partner when it comes to defense, for big defense contracts. So, it does feel like the US is playing with fire here.
Yeah, and that's going back to that political point. That's definitely appearing in the defense industry. Clearly, Trump made that break a few months back with the Zelensky moment, which was a rude awakening in Europe to how everything's changed.
Is it fair to say that the UK kind of is more of a safe haven from this kind of this kind of noise, the international noise, more particularly the small cap side, more domestic perhaps than?
Yeah, I mean, I think the UK is in an interesting place, and the UK stock market's suffered so much from capital outflows that what we've been really trying to think about is, well, where are the opportunities for the UK companies and the UK stock market in particular here? Well, I think one of them writ pretty large at the beginning of that is, if capital flows start to reverse and if people get nervous about having so much of their savings in the US, and the US is now, well, it certainly was at the end of November last year, 67% of the global stock market is the US, which is a higher number than it's ever been. If that starts to reverse a little bit, and I actually think that's quite a likely response to the kinds of things that have been going on. Actually, that's positive not just for the UK market, but for many other global markets which have been suffering from this flight of capital to the magnet of the US.
Yeah. Yes. Yeah, amazing. We try and keep these calls to a maximum of 15 minutes. There's so much we could talk about, but a few things there we've covered, and maybe we can pick up some more in some of the reports we're putting out over the next few days. So do keep an eye on the website. But thank you both for sparing the time today. Very interesting discussion.
Thanks, Graham. Thanks, George.
Cheers.
Thanks, man.